Today's our first faculty is CA Milind Bhave sir. So if I brief you about CA Milind sir, he is a practicing chartered accountant since 1994. He started his practice as a sole proprietor and then eventually he joined a partnership firm named Kirtana and Pandit LLP Chartered Accountants from 2004. He was specialized in forensic and investigative audit and sustainability reporting standards. Over the years, he carries his expertise during the forensic audit and investigating, ranging from the cases of rupees 10 crores to 14,000 crores. His passion lies in investigative and forensic audit, resource efficiency, and environmental sustainability. Since last 5-6 years, he has been studying on the topic of sustainability development and has been closely monitoring various happenings around the sustainability. He has done certification of BRSR of ICAI and he is also CII certified professional in resource efficiency and environmental sustainability. He had been part of the guidance note study group of ICAI on bank audit since 2018. He has also actively contributed in formulation of social audit standards as well. He took a break in March 2023 from traditional practices and is exploring his passion in risk and sustainability advisory and consulting services, research, studies, and etc. I would like to request CA Milind sir to give his expert knowledge and share insights with us. CA sir.
Namaskar, good morning to all. Following our culture, I salute to the Lord Ganesha, God of knowledge. I seek blessings of all seniors and greetings of all of you. Today's topic is about fraud reporting and the early warning signals. Before I start, I will just narrate or complement what our CCM has just now spoken about. I have been conducting forensic audits. Many audits I have conducted. And in few cases, I had to summon the auditor. And at times it pains. I can understand that he must have done the minimum, whatever checks and balances he should have been done. But the documents doesn't speak about it. And then it is very difficult for, taking it to the, you have to form opinion again. If there is no supporting document evidencing that audit procedures were followed, then definitely the rest of the course will follow. So, humble request to everyone to be serious about the documentation. Another point about the time cost billing. I remember I had been in DR Congo, and there one of my client had a solicitor based out of London. One day I saw a bill of the solicitor. There was some, हम लोग जैसे वो adjournment का letter देते हैं, some sort of letter he issued, and his bill was 7 minutes for drafting, multiplied by so and so. So this is how people track their time and cost. So I would request that members should, be very particular about maintaining the time sheets, and also that will give you a fair idea about what fees you should charge. Okay, now coming to the topic. My talk would be, some part would be theoretical, because that's a part of syllabus I have to. And I will try to link that whatever had been my observations while conducting the forensic audits or investigations. Okay, so this is the agenda for the day. Definitions, then types of fraud, specific to banking system, then fraud reporting, overview about the reporting framework, what are the requirements as per the regulators, as per various statutes, etc. Then early warning signals, coming to the roles and responsibilities of the auditors. Audit approach specific to reporting under LFAR. I know that there is a separate session on LFAR, but I will restrict myself to the reporting on the fraud aspect in LFAR. And if time permits, then there are a few stories I would narrate about out of my experience in some of the investigations. So I will spend some time on the definition because that is very, very important. It's a general, in general, fraud is a deliberate act of deception to gain unfair or unjust profit. Then I have listed definitions under, say, Companies Act, then what our AC is talking about, and what the Contract Act is saying about it. If I summarize all the four definitions of fraud, you will find there has to be intent to deceive, then there has to be unlawful gain, and motive could be, of unlawful gain or even injuring interest, which Companies Act talks about it. Now we will be concerned more on the definition of RBI. The important aspect about the RBI's definition on fraud is the last line. I would highlight it: with or without any monetary loss to the bank. So it is not necessary that whether there is a loss to bank or not, whether the act is fraudulent or not, will be decided not merely whether there is a loss to the bank or not. And Contract Act, it's an inclusive definition, so we can restrict to the RBI definition of fraud and the definition given under SA 240. So moving further, now coming to the types of fraud. As a passion, I have been reading, learning our ancient texts, and when I came across, the Kautilya's Arthashastra, he has listed about 2000 years back 40 types of fraud, and they stand true even today. The modus operandi had changed, but they are there. So types of fraud we can classify under different categories. So starting from the financial fraud, the identity theft fraud, cyber frauds, insurance sector fraud, corporate fraud. So their classification can be based on various parameters. Accounting fraud, when we talk about accounting fraud, it can be simple accounting manipulation. Embezzlement is pretty clear about it. Insider trading, using the information, first-hand information or confidential information to have unlawful or unjust gain. So these are the different types of frauds. Coming to the bank-specific frauds. Account opening. Now, account opening, why it is very important? Because this is the entry gate for anyone coming to the banking system. We will study briefly or go through briefly about each type of fraud, how and what about such frauds. So, account opening fraud. In one of my forensic audit, I observed that the KYC documents, in KYC documents, expired passport was taken on the record as a KYC document. Now, all these aspects, come when something wrong goes and then the postmortem happens. But these are the cases when someone is coming to the system, the account opening form is the entry gate. And all the KYC documents, we have to be very careful about it, that all the documents are proper. There are valid documents accepted before that account is opened. Now, check kiting, nowadays the system has improved because of the technology, but in earlier days, the float which used to get for the moment you deposit the check and you get the effects cleared in your account. That float used to, people used to play around that float. So that is check kiting, check fraud, forgery of signature, then counterfeit securities or documents. There were cases in housing loans where one property document, means one property was hypothecated for multiple loans. So there are, it's now how it happens, color xerox and a lot of things are there. And people are there, जुगाड़ करने वाले तो सब जगह रहते हैं. So they find out the ways. And coming next, loan fraud. Loan fraud is basically the proceeds of loan, whether the proceeds of loan are used for the purpose for which the loan or the facility was availed. So in this case, there are matters where funds have been availed and misappropriated to create some asset where the lender or the bank does not have any charge. It's a misappropriation. Money laundering, PMLA comes into picture. Letter of credit. Now, this particular non-fund based facility has been used for generating cash, like accommodation bills. Now, in my few of the cases, what I observed, see, for any trade transaction, there has to be document flow, there has to be money flow, and there has to be, most important, material flow. If there is no material flow, then it's an accommodation transaction. And I have observed in few cases, these non-fund based facilities were used to generate cash, and used sometimes for the genuine purposes because banks were not allowing otherwise. So they used the non-fund based, and in few cases it was misappropriated, misapplied, etc. Then ATM fraud, digital fraud. I think information technology, we have separate section, so I will not take much time on that. The loan fraud, which we talked about. So it starts from, when the borrower approaches the bank, inflating income, inflating value of asset. These are the ways which we call as misrepresentation or giving false information or incorrect information, so that the bank will do their credit assessment, and they will tend to give you or sanction more and more credit facility or the quantum of credit facility to manipulate basically the quantum of credit facility. Now, money laundering, a lot of things currently going on with the ED, coming into action. So basically money laundering comes in under PMLA, and the proceeds of loan, whenever they proceeds of loan, there are chances that those proceeds have been used for money laundering. So we need to be very careful whenever we come across certain transaction where it raises doubt about its genuinity, because PMLA Act is very stringent, and as an auditor, we need to be very, very careful about it. Now, this we discussed about later non-fund-based facilities. Now, coming to the reporting. Now, fraud reporting per se. So far, bank audit is concerned, as a statutory auditor, maybe central statutory or branch, there is reporting under LFAR, which talks about the particular areas to be reported on specific to the frauds. Now, generally fraud, incidents of fraud will take place at the branch level. Head office level, there is nothing, because operations are by and large at the branch. So branch auditors need to be very careful about it, and while reporting on the reported fraud, the current status, and if you come across any suspicious transaction or suspicious transaction in accounts, you should be very careful about reporting it, forming your opinion about it, and accordingly reporting. Now, these are as an auditor, what we do. There are two parts in any audit report. One part is statement of fact, and another is opinion. So, in some particulars, we say it's a simple fact. And in certain aspects, we have to opine on the affairs, financial, as for example, the true and fair view, or wherever we seek explanation, whether those explanations were satisfactory or not. So there are two parts basically: statement, pure statement, and opinion. Now, coming to fraud, it will have impact on, if you come across fraud in course of your audit, then definitely the question about true and fairness, opinion, unless the MOC and all those aspects are taken care of for providing appropriately, reversing the income recognized, etc., it will have impact on your opinion. Now these are the certain other reports to be submitted. ICFR, then LFR, we will talk about it. Then the SLR requirements, treasury operations. So there is huge list. I know as a branch auditors, there is very little time and a lot of things to do, but we don't have any other option. We have to. Now, coming to the reporting, two parts, main report and LFR. I have classified it under these two. Main report is basically where we issue audit opinion, and LFR is basically a management report which is submitted by the auditor and which brings out a lot of details, factual details, some part of opinion of the auditor, and even suggestions by the auditors. Now coming to early warning signals. Early warning signals, actually in 2018, Institute had formed a study group on the basis of request received from RBI, because Institute had been apprising RBI that early warning signal which have been listed in the circular needs to be revisited and modified, amended, added. So RBI requested Institute to suggest. So there was a study group formed. I was part of that study group, and we went through each and every early warning signal which has been listed in the circular, and we gave our opinion, means suggestion, because there were certain early warning signals which were redundant or not applicable because of changes in statutes. An example of is sales tax registration. Now GST is in place, and in addition to that, we suggested a few more early warning signals to be added to the list. For the benefit of members, I have circulated that work group, the list of early warning signals, which I think the branch must have circulated. Since RBI has not yet amended the list, we will stick to the list as per circular. And as we go with the early warning signal, I will try to correlate some of my observations in my audit also, and as a forensic auditor or investigation. Now the first one, statutory defaults in statutory dues. In a way, it's appear to be very minor, but in few cases I observed, of course, when conducting the forensic audit, while doing the post-mortem, when I observed that staff professional tax or sales tax, now the GST, if that is not paid, what does that mean? It's not going out of the pocket. Staff professional tax you collect from your employees, and that has to be deposited. No contribution to be added even. Similarly, sales tax is to be collected. You collect from your customer and you pay it. Now, if such taxes you find there are defaults or long outstanding, then it's a first signal that nothing is all right. Then second one applies to the enterprises which are basically in projects, which has got life cycle extending beyond 2 years, 3 years. And in such cases, what happens, initial project plan is circulated or given to the bank while applying for the credit facility. And then the tendency is to keep on, submitting now. There is amendment to the project, so the timelines are extending. So if it is observed that it is becoming the trend to, come out with frequent amendments to the project, and accordingly, the additional credit, demand for additional credit. That's a signal, warning signal for about something going wrong. Then the bills outstanding and the tendency of bills remaining for overdue is again a signal for all is not well. Then I will cover a few of the important early warning signals. Now, invoices divide GST in. Now, what happens for documentation? We go normally by checklist. So, with a checklist, you will have everything on perfect. There will be invoice, there will be GST. But whether that GST is valid, it is very difficult. It is very difficult for the bank or particular officer who is in charge of that, say, account, to go through each and every aspect of this. And that's how, as an auditor, when we say we have to review the early warning signal, whether the bank or the branch has got system in place where the early warning signals are detected and appropriately dealt with. So there can be a case where the GST number which is appearing on the invoice is not correct. So what the system, the bank or the branch has got to verify whenever certain bills are lodged for the payment, to ensure that the invoice is genuine invoice and there is nothing wrong with the demand lodged. Then merchanting trade, actually it happens with international, specifically international transactions. Means, for example, metal market, London Metals Exchange. People, whenever borrower is seeking any credit facility or for such transactions, he has to disclose both the legs. So the import leg and export leg. If any of the leg is not disclosed, then it's a warning signal for the bank to be alert. Now I will pick up only some of the important this thing. This borrower sending always request to postpone the inspection. Now inspection per se has to be surprised. And if the history shows that borrower has got tendency to, for whatever reason, extending the date for inspection, then it's a signal that something is going wrong. I can share one of my experience in this respect. It's a case study which I would like to discuss, but since this is a relevant point, I will share my findings about this extending inspection dates, frequent request to extend inspection dates. Account was in the edible oil industry, and since edible oil industry, you have seasonality also. So what used to happen whenever the inspection bank used to send intimation that we are going to visit, we will do the stock inspection, we will visit your plant, etc., etc. So what borrower is to, advance always some excuse. No, now it's a season for buying the seeds, so we will be busy, we won't be in a position to attend you, so please postpone. And in this case, what happened means when in the forensic audit, while conducting forensic audit, when I analyzed, period on period, his stock statement, then the book date statements, there was huge variation. Now, our accounting language says that for each debit there is credit. So whatever you do, it has to reflect somewhere. So I analyzed these stock statements, wherein a lot of fluctuations we observed. Then we analyzed operations in account with the bank, of course. Then declared turnover, sale, purchase, because in the stock statement, borrower has to disclose the whatever sale, purchase, then outstanding creditors, suppliers balance. And when we tried to join all the dots, we came across that there is something wrong. Now that was a signal. So I went to the bank again. I asked for the stock inspections used to happen. So I called for the stock inspection reports to check whether there are any observations, adverse observations or qualifications in stock audit report. I found none. Then we further analyzed, the dates of stock audit. All the stock audits were conducted in the lean period. So definitely, you don't have much operations going on. Scale of operation is less. And the static information was only reported. And sales had been for, say, last 6 months, this much was sale, this much was purchase, stock inventory levels had been this. But no analysis. Means that value addition. See, if I am called for conducting stock audit, static information I have to definitely provide for. But then there has to be a value addition. Wherein there were indicators, because when we analyze the levels of inventory, fluctuations in level of inventory, within inventory also the fixed finished goods, then WIP, raw material, and vis-a-vis purchase, suppliers balances outstanding, customers outstanding, sales. So you should be in a position to draw the dots, join the dots, and arrive at whether you are comfortable with whatever working capital cycle is appearing period on period. So this value addition aspect is very much important. which we observed, and the reason for always extending the inspection was this. They used to manage, stock, book date, and then call for the bank. Now all is well, you come and do the inspection. Now point number 21, LC. Means if I analyze, say, whatever forensics I have conducted, around 50 to 60% cases, these LC, bank guarantee, these non-fund based facilities were misused. I'm saying deliberately misused because when we talk about fraud, there has to be a misappropriation also, because you have to prove the money trail, money is going out of the system. So almost 60% I have observed that these non-fund based facilities were used for generating cash, at times used for genuine business purposes, but in many cases for other than business purposes, maybe investment and diverting the funds out of the business, etc. Now, here I would like to share one of my experience in an engineering industry, how this non-fund based facility was used. Now, what used to happen, a factory, say in Ahmedabad, supplier, say in Rajkot, customer also in Rajkot. Then the document trail was showing that material is flowing from Rajkot to Ahmedabad, and then after some process or conversion, it is going back to Rajkot. From source is Rajkot and ending in Rajkot. So when we were analyzing, because it's a puzzle, when you do forensic, it's a puzzle. You have to, do a lot of, assumptions. You have to create situations to literally understand, because there is no one who is going to tell you what they have done. So in this case, what we analyzed is all the documents, and from the documents per se, everything was perfect. And when I say that early warning signals at bank or branch level, it is really challenging for them. Means just assume the officer who is sitting for this, verifying these documents, he will go just by checklist. LC hai, invoice hai, LR hai. He will just go on taking everything, that all the documents are in order, and he will process that. So while conducting the forensic, now we go beyond the documents. So we picked up sample documents and tried to, plot by timeline. So we observed that suppose if it takes the transporter to reach from, say, factory to the source or destination point, say 10 hours are required. And we observed that one truck is doing the movement for 4 times in a day. And then that alerted us. So then going further, we tried to check the truck number. valid vehicle number. And the result was shocking. It was registered number of a bike. 10 tons of steel transported. And for, while submitting documents, what used to happen, incoming was disclosed in say tons, and the outgoing billing, which used to happen, that was in say SS tanks of so and so size. Now when we tried to match that, because ultimately if some material is coming in, you are processing and material is going out, then that inward and outward should at least tally somewhere. Then we observed it is very difficult because from the tonnage to volume, how do you convert? But when we observe these two, the discrepancies or, issues in the documents, and the documents were telling something else. So then we compared, the declared turnover as per audited financials and turnover which is reflecting in, it was a consortium account, so turnover reflected in all the consortium bank accounts. And to our surprise, the turnover as per audited balance sheet was 200 crores. The debit credit summation of this consortium bank after eliminating interbank transfers, it was coming to 300, 400 crores. Now how that is possible? If I have got turnover of say 200, there will be always some receivable. So at the most, I will have summation equal to 200, means whatever my turnover is, assuming that my outstanding levels are same. Similar will be on the supply side. Whatever my purchase, there will be certain payables. Even if I am paying, say, 100%, it has to be equal to the declared purchase. When we observe that, why these are not matching? And mind you, this further went to, for the staff accountability review and also questioning the auditor who issued the audit report. Because these were the glaring figures, disconnect, I would say, that the turnover and the debit credit summations are not matching. And we questioned the bank also, because after that it was a staff accountability review also. Then he said that, how do we know? Now since you are doing postmortem, you are coming out with these observations. That time तो अपना तो धंधा चल रहा है ना, वो LCR है, डिस्काउंट कर रहा है हमको. We are getting the charges and interest, etc., etc. We are getting the turnover. So that had been the response, initial response. But when it went to staff accountability, then these responses they were very careful in giving response. So this is how, the non-fund-based facilities which at times are used, or I would say misused, to generate cash, and in many cases out of such generation, there is a misappropriation or taking the funds out of the system. No, I think we cannot go one by one each and every warning signal. Now, one I can talk about wherever we observe, certain huge payment which is going to some party which has no connection to the normal business of the borrower. If such transaction is observed, then it's a warning signal that there could be a chance that funds are getting misappropriated or taken out of the system. Now, related party transactions is a famous and very popular way where the funds are siphoned through the multiple layers of subsidiaries and a web of group companies, multi-layered. I think rest are very clear. I would request the members to go through the list which has been circulated, which was, we came out with that suggestion in 2018. So, just keeping back of mind, I know there is very little time when we conduct the audit, but if something sits in back of mind, it will at least alert you whenever you are going through the documents or going through the advances portfolio. Because the impact of this would be definitely the quality of asset and income recognition. Now, roles and responsibilities, it's a textual. I don't want to, spread any fear. But there are, cases where I had to summon fellow auditor, fellow professional, I would say. And it pains because of discrepancies in documentation when the professional cannot justify the audit procedures he has conducted and the audit opinion he has issued. So, I will just, because it's a text of different acts or requirements, you can please go through it. This also I circulars. Now from 2019, even the urban cooperative banks also require this LFAR reporting. We'll straight now go to the LFAR reporting. Now, audit approach and audit procedures while reporting on the fraud. As we discussed now, effective credit monitoring. The auditor is normally there at a branch for how many? 5 days, a week maximum. Now, audit procedure is that auditor has to, take confidence about having effective credit monitoring system at the branch level. How that is possible? Now, see, I am trying to connect the practical aspect with the what the books are telling, that this should be audit procedure, or this is what one should follow. So for that, I would suggest that whenever we do the risk assessment, there are different parameters or components of the risk or control environment, I would say, which starts from the policies, procedures. Whenever we receive, the appointment from any bank, now it is available in the domain also, public domain also, and banks also do share. So it's always helpful to go through these policies, procedures, and internal circulars and make noting of it. Why noting of it? That's the documentation that you have gone through the policies, procedures, have taken note of something, and which you can test while you are at the branch, and that could be through the interview or discussion, which again needs to be documented. Coming to the next level, policies, procedures, discussion with the branch official. Now I'm covering all the audit procedures together, because one by one, ultimately, we have to establish that what are the procedures we should follow and how we should evidence that these procedures were followed. So, policies, procedures, then interview with maybe the business head. If it's a large branch, then you may have different business heads. If a small, medium scale branch, then maybe the branch head. So you can have interaction with him, and just casual interaction. You can note the points, then confirm the points with him. Okay, this is what we discussed. See, that will give you also the comfort about whether the branch head or that business head is aware of the policies, procedures, and how the things are working at the branch. Now, next is how do you test it? Now, policies, procedures, etc. are there. So, for testing, simple ways to call for different reports of, say, concurrent audits, stock inspection reports, RBI inspection reports. Go through those reports, make noting of it, giving cross-reference of those particular reports. And wherever in any report, if you find there are certain observations or qualifications which are triggering the early warning signal, then we should be alert when reviewing the advances portfolio of that particular account where you have come across some observation in maybe stock auditor's report or concurrent auditor's report or any inspection report. So now, keeping that, noting and cross-referencing, these were the reports we have, called or we have called for, we have gone through it, we have taken certain points out of it, then again discussed with the branch head, prepare a minute of it. So this is how the documentation which will establish that the audit procedures were followed and evidencing that the audit procedures were followed and the outcome of your audit opinion or the report. Now, this staff angle, I would like to share some of my experience. In one forensic audit, bank called me for conducting forensic audit, and there were two parts of it. One was forensic audit and another was reporting on the staff accountability. Because RBI RBI had given direction that wherever fraud is established, there has to be a staff accountability angle to be reviewed, verified, etc. So first of all, when because these are two different legs of the same coin, but I was worried about, of course, my delivery of my professional output and recovery of my fees. Because wherever it comes to staff accountability, I was pretty sure that it is not going to be a easy game. So, but the bank said, no, these are the two things you have to do and you have to report on both. So I said, okay. Then I sought, cooperation from the vigilance department, because ultimately vigilance department's job is the same. So it was agreed, and I did the audit. It came out with that there has been a misappropriation and fund trail of which is going in some of the subsidiaries of the borrower, and from that subsidiary it is again going out. So once that was established, then question came about the staff accountability. So we had to then do the interviews and interrogations. Now we start from the sanctioning level, because that's a point where the bank is advancing money. So for sanctioning, when we sat with all their manual, procedural document, etc., we prepared some questionnaire, and then we started doing interview, then interrogation also happened. I requested members from the vigilance cell to be with me. Just have to cross-check about what the responses are given are appropriate and valid. So in those responses, what I observed, the counter or the counterpart, that particular officer, I questioned him that these balance sheets or financial statements you have received. So what did you do? Because as per checklist, financial statements last, say, 3 years financial statements should be obtained, reviewed, etc., etc. So he said, the borrower submitted these financial statements, and I have plotted everything, the current asset, current liability, stock, debtors, etc. Then we question about, in your procedures, there are certain ratio analysis also you are expected to do. So how you have done that? The issue which comes in auditor's case also came there also. There was no noting about, that the ratio analysis had been done. And that case was actually a tricky case wherein it was a stockbroker actually. And trade book, open trade book, he never will disclose, because as a contingent liability, at least you have to disclose whatever your open, liability. And when we started questioning that, the officials used to, their stereotype, no, as per our manual, we are supposed to obtain this. I have obtained financial statements, audited financial statements. I have placed reliance on the audited financial statements. And that's it. So then, question about then calling the auditor. That was a period when it was not a statement but guidance provided by the institute that in such cases there has to be disclosure in financial statements about the contingent liability, or even recognizing that whatever liability or asset for the book closure purpose. The auditor initially took the view that it is not mandatory. So I said that even though it is not mandatory, forget about whether it is a guidance note or a statement. Can you say the financials are giving a true and fair view? Because the bank is saying that we relied on the audited financials, and based on these audited financials, we have extended the credit limit. There was no answer. And in the report, there were other discrepancies also, for which the further fallout happened. So whenever this staff angle is reviewed, they will always pass the buck on the us. ये तो फलाना चार्टर्ड अकाउंटेंट ने किया है, ये तो ऑडिटर ने सर्टिफाई करके दिया है. Because that book date statement also bank asked certified from the chartered accountants. तो वो तो he will do a postman job. हाँ यस ये ने सर्टिफाई किया, ले लिया रिकॉर्ड पे, सिस्टम में डाल दिया, बात खत्म. But manual, any bank, manual doesn't say that it's the manual doesn't stop there. See, ultimately everyone has to use, this professional skepticism. It's not only for us as a chartered accountant, but everyone has to use the skepticism. वो नहीं होता है बहुत दफ़ा. So the staff angle, wherever now fraud is detected or reported, the staff angle is the compulsory outfall of it. This is summarized. I have tried to put what are the particulars to be reported and accordingly what should be the action points in a nutshell. So I would request members to refer to it. How much time? 5 minutes. Okay, out of these two I have already narrated about the ILC or non-fund based limits being misused. About Urban Cooperative Bank, I would narrate the story. Actually, that started as an audit, not as a forensic audit. That started as an audit. Of course, that was a re-audit. And while doing re-audit, my team was struggling because everything was appearing to be perfect. And there was no clue coming out. What's wrong, what's wrong? Of course, there were certain indications, but you need to, establish that. So, what happened? This urban bank, when we did cross-reference. Now, in normal audit, we don't do that. But since this was a re-audit and since re-audit was ordered, that definitely there is something wrong. So we went a step further, just as a sample. And we came across 2 or 3 fictitious loan accounts. And we said that we don't know how far it is, and then it's better to write to the Commissioner of Cooperatives and even the ministry. So we sent our flash report. This is what we are observing. So they gave a direction that you forget that you do that re-audit, whatever, but go deeper into all aspects and do the resizing of the financial statement. जो भी ऊपर दिख रहा है वो हटा के what is the factual position of its assets, its liabilities, and its income, reported income. So then we started digging out all kinds of whatever these early warning signals, the list which we went through, everything was there. There were fictitious accounts, and to our surprise, there was about 200 crores which were, camouflaged in reconciliation. And reconciliation of whom? Balance with RBI. So we digged out that for the reconciliation part, it was very tough for us to establish, because you cannot just say in the report that the extent of this is so and so. You need to establish that, and also the modus operandi what had been used. So what we did, when we selected few large branch only, because that had nexus with the branch reporting or branch daily reports. So individually, when we verified the branch returns, everything was appearing to be all right. But when we did actually, we did this Benford law test on the all reconciliation entries. A lot of used data was there, and that analysis threw that these are some figures which are not appearing to be normal. And hence clue was there, but now how do you establish? So what we did, we spread the team to all the selected 4 or 5 big branches. One was sitting in head office. And we used to call, every branch they will call entry by entry on the sample days. And after this exercise was done, we came across that there were certain entries which branches are talking about, which are not in HO. And then going further, when we took out the vouchers, if members must be aware that if instrument passes through the clearing system, earlier it is, now system is different. There used to be endorsement of that effect having been passed to the respective bank account, and that's the proof. So while checking the vouchers, we observed that there were certain checks which were in the vouchers which did not have that endorsement. and then we tried to how it is. So we just picked those instruments, and they came out of the voucher bundle. And that was the way they used to manipulate at head office and park it in the reconciliation with RBI. And that's how quantum was around 200 crores. So total quantum was around 900 crores, 600 to 700 through the fictitious loan accounts, and balance was camouflaged in the reconciliation. So, if anyone has got questions.
So much, sir, for this wonderful journey of this early warning signals and the bank audit. I'm sure these early warning signals, if highlighted by the members, would surely gain them in completing the successful of their bank audit, and the purpose of actual audit will be solved. So thank you so much. I, on behalf of Ahmedabad branch and behalf of all the members present, would like to extend a heartiest vote of thanks, our sincere gratitude for your valuable time and patience and sharing your rich experience with all of us. Thank you so much, sir. We have with us Siva Prasad, sir, for the next faculty session. With a quick change of dice, I'll request my colleague in Managing Committee member Abhinav Malavia and the coordinator for the session, Sanket Bhai, to please accompany sir to the dais.